Today we're going to talk about something that could turn out to be one of the most important moments for the crypto industry in recent times. A statement from President Donald Trump has suddenly pushed the discussion about crypto regulation and banking power right back into the spotlight. But what makes this situation interesting is not just the political message itself. At the exact same time that this statement was released, Ripple quietly moved forward with a major upgrade to its global payment infrastructure. Meanwhile, data about market sentiment around altcoins has dropped to extremely low levels. When you start connecting all of these developments together, the picture that begins to form is much larger than a single headline. And right in the middle of that bigger picture sits XRP. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So, be sure to stay focused as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. First, let's quickly look at the current state of the market. Bitcoin is currently trading around $70,688 and is up more than 5%. Ethereum is sitting near $2,401 with a gain of about 3.7%, and XRP is currently trading around $1.38. So overall, the market is showing signs of strength today. Now let's talk about the statement that suddenly caught the attention of the crypto community. President Donald Trump recently published a message on his social media platform, Truth Social. In this statement, he openly criticized the banking industry and accused banks of trying to slow down the growth of cryptocurrency. According to Trump, banks are actively working to undermine two important pieces of legislation that are being discussed in the United States, the Genius Act and the Clarity Act. He did not hold back in his wording. Trump warned that if the United States does not finalize clear crypto market structure rules quickly, the country could risk losing the entire industry to other global powers, including China. This message raised eyebrows across financial and crypto policy circles. The reason is simple. The Genius Act is designed to help open the door for crypto infrastructure to operate more clearly within the United States financial system. Meanwhile, the Clarity Act aims to establish proper definitions and regulations for digital assets. If those rules are finalized, it could remove one of the biggest barriers that institutional investors currently face. Institutions typically avoid entering markets where regulations are unclear. Once the rules exist, however, large financial players can begin operating at scale. Trump also suggested that banks might not be eager to see this happen. In his message, he accused traditional banks of delaying progress while continuing to report record profits. His implication was that banks may not want a financial system to develop that could compete directly with their control over payment rails and liquidity infrastructure. That leads to an important question. If banks are pushing this hard to slow down crypto development, what exactly are they worried about? To understand that, we need to zoom out and look at what is happening across the broader crypto market. One interesting signal is coming from social sentiment data. According to on-chain analysts from Sentiment, conversations about altcoins across social platforms have dropped to extremely low levels. In fact, discussion around altcoins has reached what could be considered rock-bottom sentiment. Historically, this type of situation has appeared right before major rallies in the crypto market. When we look back at previous cycles, similar patterns can be seen. For example, in September of 2024, sentiment toward altcoins fell sharply before the market suddenly moved higher. A similar situation happened again during the summer of the previous year. Each time public interest dropped to very low levels, a strong rally followed soon after. Right now, altcoin attention appears to be sitting near those same historic lows again, and that creates an interesting possibility. Major market rallies often begin when most people stop paying attention. When the crowd believes that nothing important is happening, large investors sometimes start quietly positioning themselves. This pattern occurred before the massive altcoin run in 2017 and again before the major market expansion in 2021. Typically, the sequence looks like this. First, sentiment declines, then liquidity begins building quietly, and eventually a powerful narrative emerges that reignites the entire market. So the question becomes, what could become the next narrative that drives the market forward? One possibility could be the introduction of clear crypto regulations through legislation like the Clarity Act. If regulatory clarity arrives while infrastructure is already being developed behind the scenes, the market may not fully realize what is happening until things have already started moving. And that brings us to the next major development that recently appeared on Wall Street. Just days ago, a significant piece of financial infrastructure quietly appeared inside the traditional financial system. The Depository Trust and Clearing Corporation, commonly known as the DTCC, added Ripple's Hidden Road to its directory. This move allows Hidden Road to connect through the NSCC post-trade settlement rails used by Wall Street institutions. At first glance, this might sound highly technical, but in reality, it is extremely significant. The DTCC processes trillions of dollars in securities transactions every single year. It acts as one of the central settlement systems for financial markets in the United States. When something connects to those settlement rails, it effectively becomes part of the financial plumbing used by major institutions. Hidden Road, which Ripple acquired, is not just an ordinary company. It is a prime brokerage firm that is deeply involved in digital asset markets. Prime brokers provide three critical services to large financial players: liquidity access, risk hedging capabilities, and trade execution infrastructure. These services are essential for institutions that need to move large amounts of capital across markets. So when a prime brokerage connected to the crypto industry suddenly becomes reachable through traditional Wall Street settlement rails, it suggests that the financial infrastructure linking these systems is beginning to form. And the timing of what happened next makes this even more interesting. Only one day after this development appeared, Ripple announced a major upgrade to its own platform. Ripple revealed that its payment network is evolving beyond a simple cross-border transfer tool. The system is now becoming a fully integrated infrastructure platform that includes stablecoin settlement, custody services, liquidity management, and payment collection capabilities within one unified environment. In other words, Ripple is expanding from a payment solution into a much broader financial infrastructure system. According to the announcement, Ripple's network is already processing more than $100 billion in payouts across over 60 markets around the world. That means the system is not just theoretical technology anymore. It is already functioning at a global scale. Large-scale payment systems require three essential components: liquidity, settlement rails, and distribution networks. When we look at the recent timeline, an interesting pattern begins to appear. First, Wall Street settlement rails connect with liquidity providers through the Hidden Road integration. Then, Ripple expands its global payment infrastructure. As those pieces begin to interact, a larger financial loop begins to form. Liquidity connects to settlement rails. Settlement rails connect to payment systems. Payment systems generate more liquidity demand. This cycle creates what many analysts describe as a financial flywheel. When that flywheel begins spinning faster, assets that provide liquidity inside the system can become extremely important. And this brings us back to Trump's message about banks and crypto. When viewed in isolation, his statement might look like standard political commentary. But when viewed alongside the infrastructure developments happening behind the scenes, it begins to look different. Traditional banks have historically maintained their power by controlling payment networks and liquidity channels. Cryptocurrency networks attempt to build alternative systems that operate outside of those traditional banking monopolies. If the United States eventually introduces clear crypto market structure laws, institutions may no longer need to wait on the sidelines. They could potentially connect directly into these emerging digital financial networks. That means the debate we are seeing right now may not be only about regulation. It could also represent a competition over who will control the next generation of financial infrastructure. Will it continue to be traditional banking systems, or will digital asset networks play a larger role in the global financial architecture? If the United States truly intends to become a global center for crypto innovation, as Trump suggested, then the race to build that infrastructure may already be happening quietly behind the scenes. And the broader market may not fully recognize it yet because many people remain focused only on price charts. But historically, infrastructure is almost always built before widespread adoption begins. First, the financial rails are created. Then, liquidity connects to those rails. After that, institutions start moving in. Only once those steps occur does the broader market usually react. Right now, we are seeing several signals appear at the same time: increasing political discussion about crypto regulation, Wall Street settlement systems connecting to digital asset infrastructure, and global payment networks expanding their capabilities. Individually, each of these developments may appear to be small headlines, but when they are placed together, they begin to resemble the early architecture of a much larger shift in the financial system. The market itself has not fully reacted to these signals yet, but the systems behind the scenes are already beginning to connect. And the signs are starting to appear for those who are paying close attention. Most people have not connected these dots yet, but Ripple just might have. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.